Good evening, everyone. Welcome back to the channel. Hope everyone had a great Christmas and so far a great holiday season overall. We got one more to go, New Year's Day coming up. So, hope everybody's doing well. And what I wanted to discuss today is since I've started talking about covered call ETFs on this channel, which coincidentally was when I started developing an audience, uh, I started talking about these in particular. Four character ticker symbol funds, JEPI and JEPQ. And it seems like JEPQ has almost become the channel favorite. And I talk about it quite a bit, and it also gets a lot of views, which probably has something to do with me talking about it over and over again. But I started, those of you that have been following me for most of this year, I started with talking about JEPI because JEPQ is a relatively new fund. But what I wanted to do, since I've talked about both of them and I had some questions come up, I want to discuss both of them because I actually haven't been talking about JEPI. And the reason being, I've completely forgotten about it essentially because the JEPQ's payout is much better. But I was actually doing some hard looking for myself today, for my own portfolio, because I'm thinking about loading up on JEPQ in the new year. Not necessarily loading up, but more, maybe a bigger chunk than I normally would. So I found a good article summing this up. So let me go ahead and share that now. I'm going to share my screen. And like I said, really, with the dividend that the JEPQ is paying, I almost see no point in the JEPI at this point. As many of you know, I'm not a huge fan of the whole diversification strategy in terms of having so many different funds. I think if you get a few good funds, a lot of times that's your best bet. And if you really want to diversify, just do index funds, total market index funds. But for this, like some people might say, well, you know what, let me throw 5,000 at JPI, let me throw 5,000 at JPQ. For me, the way I would approach that, I would rather have the yield that the JPQ is paying. And plus, I think it has more upside, which I'm going to get into. So this article kind of sums up what I want to discuss. And coincidentally, it just came out like 2 days ago or 3 days ago. So this one says, here you can quickly compare and contrast key facts about JP Morgan Equity Premium Income Fund, JEPI, and the JP Morgan NASDAQ Equity Premium Income ETF, JEPQ. So JEPI is actually almost 2 years older than its successor, the JEPQ, and they both have a 35.35 expense ratio, which is not bad at all. Some funds are a lot higher. So this chart actually shows the performance of both, and I believe what you're going to see is that actually, no, you're not going to see what I thought. JEPI is slightly outperforming JEPQ. But a big part of that is because the NASDAQ is down so much this year. I think the NASDAQ has had one of its worst years on record. And the JEPQ just debuted this May. So we have more history for the JEPI. And this is where, like I try to tell all of you all, you really need to think critically because on the surface, if you just spend 5 seconds looking at this and you pretend that your 5 seconds of actually reading is your analysis, you would be flawed because so JEPI, if you just look on the surface and you say, okay, this one is only down 3.3% year to date, but the JEPQ is down almost 13%, and then you look at the 1 year and you see that, oh, look, JEPI is down even less. Well, why is that? Okay, so you identified the what successfully. So good job on that. Round of applause for that. But the why is really the key that you have to identify because the why is what's actually driving the past, present, and potentially the future of these funds. So the reason this one is down less, first of all, it's been around longer. It was around during the bull market. And really, seeing that it was down, factoring in that we were still at the tail end of the bull market a year ago, is nothing impressive at all. It's actually not a great sign. And then the fact that the JEPQ is down almost 13% suggests, at least to me, that it's at a better buying point because I think given the recordly poor year that the NASDAQ has had, I think it's going to get to the point as it bottoms out, it's only got one direction to go, up. So, like they say, what goes up must come down, and on the inverse, what goes down must come up. So that's why I'm really bullish on the JEPQ and loading up, boosting my own dividend portfolio. Because, like I said, I was doing some hard looking today on different funds that I, may want to, you know, leverage up, get more into in the new year. So, okay, so you see the performance of the two of them, and Sharp ratio. We don't typically discuss that on this channel. But it's lower for JEPI. So this article is basically telling you that JEPI is outperforming JEPQ. So it's giving you the what, but it's not quite giving you the why. And what we're discussing is the why, and that's the moneymaker, the why. So let's see. This one, drawdown comparison. Oh, this is the 1 year. And then if we go to maximum, it's going to be even more so. Or I don't know if this chart will let us do that. Unless, let me see. No, it's only going to go back. This is not the greatest chart, honestly, because it's only going to go back to when JEPQ started. If this were a more well put together chart, it would go back to the inception of JEPI, and you would see one line chart just over here like this, and you see the other line chart over here because it's been around for, 2 years longer than the JEPQ. But anyway, here's volatility, more volatility for JEPQ, of course, because it's been fluctuating a lot more. So, but see, when it drops, because it's dropped twice now, it's dropped twice to like $40, which is where it is now. So for me, I think of any entry point, that's the best one that you're going to find. And now let's go to Yahoo Finance, and let's just look at, the main thing everyone cares about with these two funds is obviously the payout. So let's just look at that real quick, and then we'll probably end the video. See, JEPI is more expensive, and it's only paying a 10.62% yield. Part of that, again, is a function of the fund being higher, because remember, the dividend payout is a percentage of the fund's value. We know how that works. Okay, so let's go to dividends only for the past year. And let's see. See, the monthly dividend is higher, but as a percentage, it's lower, because we just looked at JEPQ on Christmas Eve, and we saw that it was, the percentage is still like 16%, but the actual dollar amount was like 50 cents and change, or 55 cents, I think. Because see, as of today, it's $40.99, still 15.89% payout. But the actual dividend for the month is like, and we'll see here as I pull it up, is like 54 cents. But keep in mind, like 2 months ago or so, or in November, it had its highest payout ever in the history of the fund, which is only like 6 months or 7 months. Yeah, 68 cents. So it actually, the dividend outpaced the JEPI, and it was a higher dollar amount. That's the gist of what I wanted to discuss today. If you like that, please remember to like, comment, and subscribe. Thanks so much for tuning in, and take care.